Hello and welcome to ChartMill. In this video I'll show the screening possibilities regarding the false index indicator in ChartMill and the trading strategy whereby this indicator is used both as a trend indicator but also as a buy or sell signal. Now the false index, which is developed by Alexander Elder, uses price change in combination with volume to identify the strength of a price movement. The author argues that every price movement has three components, each of which plays an important role in itself in order to evaluate the price movement as correctly as possible. These are direction, extent, and volume. So direction refers to the direction the price is moving. Is it consistent with the existing long-term trend, or is the price movement more of a counter-trend move? The extent has to do with the strength of the movement itself, in other words, the momentum. A sudden rise of 4% with an average price movement that is lower than 1% is a totally different story than the same rise of 4% where the average volatility of the stock is 3% anyway. And volume, the number of shares traded during that period of price movement. A breakout with high volume tells us that buying is being done with confidence, while a breakout with no signs of rising volume is to be avoided. So far, a short explanation. There is much more to tell about this indicator, but just visit our website, more specifically the documentation center, where there is a full article available about this particular indicator. So on the stock screener page, go to the Indicators tab and click on the appropriate false index filter. There are three possible filter options. So the first one, a declining false index or an increasing false index, and this does not take into account whether the indicator is above or below the value 0. Only the rising or falling aspect is important. Filter option 2, a false index lower than 0 or a false index which is higher than 0. And whether the indicator is rising or falling is irrelevant, only the position of the indicator compared to the 0 line plays a role. So you can combine filter options 1 and 2. For example, you can set that the indicator should be rising but still quote below the 0 line. And then the third and final option, the false index crosses the 0 line upward or the false index crosses the 0 line downwards. So this third filter option is not compatible with the first two. Some examples of filter screens. So this screen shows all stocks trading above their 200 simple moving average and with the false index breaking the 0 line upwards. And this next screen shows all stocks trading below their 100 simple moving average with the false index indicator falling but still above the 0 line. So in this trading strategy, the false index indicator is used as a trend confirmation signal and at the same time as a warning sign for a possible buy or sell setup. The strategy looks for stocks whose price is in a bullish trend but where the price has fallen below its 5-day moving average in recent days. So we try to use this pause to take a long position in the existing direction, using a relatively short stop loss which protect us if the decline were to continue. Because we want to take advantage of a short price dip in an existing bullish trend, this is a so-called retracement strategy. So first of all, I use this screen filter to select the stocks to which we are going to apply the strategy. With these filter settings, only stocks whose price is above the 200 daily simple moving average but below the 5-day moving average are selected, and the price may not have closed negative in the last session and the volume must be higher than the day before. In addition, the false index with standard settings must be above the 0 line. So next we are going to add the false index indicator 3 times to the chart. One time the false index 100, false index 14 and to finalize the false index 2. I have also added the 5, the 10 and the 20-day simple moving average on the chart, so the chart should now look like this. Next, you first examine the two lower indicators, being the false index 100 and the false index 14. These should both be above the 0 line and thus turn green. As soon as the false index 100 or 14 is red, the stock is not eligible for a trade setup. The fact that both these intervals of the indicator are green, together with the stock being above the 200 simple moving average, assures us that the medium and short term are still positive. As for the false index 2, we focus on the stocks where the indicator is still in red but is about to intersect the 0 line upwards or has just crossed it upwards. A few examples will make it obvious what is meant by this. So this chart shows both the strength index 114 in green and the strength index 2 has just crossed the zero line from below. The same goes for this one. Both force 114 are green, force 2 just passed the zero line. And here force 114 are green and force 2 seems ready to break out above the zero line. So for these three stocks, the conditions are met to be retained as possible buy setups. Please keep in mind that a mere signal from the force index 2 indicator is not sufficient to take a position. Indicators are tools to support or reject a hypothesis. They should never be used blindly as a buy or sell signal on their own. In technical analysis, the more elements converge, the greater the chance of the setup succeeding. It is therefore important to look for other relevant information which can confirm that we are possibly dealing with just a small price correction within a strong main trend. The following things are taken into consideration. How's the volume? Is the price close to support? Are there any recognizable price patterns? How far away is the next resistance? How does the price currently relate to the simple moving average 5, 10 or 20? Are there any recognizable candlestick patterns? Here are some examples. So on October 20, this stock broke out of its existing trading range with huge volume and a firm gap up. After this first breakout, price dropped again rather severely. It even closed below the 20 SMA on October 27. Next day, price regained the 20 SMA and a very narrow candle appears on October 29. At the same time, force index gave a trigger buy signal. So there are quite a few elements on the chart that show that this is indeed a potential low risk entry. The volume during the price retracement was clearly lower. No follow through occurred after the price closed below the 20 SMA. The current price action is retesting the existing support in an upward trend. And the last candle is an inside candle. So a buy stop at 50.45 with a short stop loss just below 48.50 is a great opportunity to capitalize on the breakout that occurred earlier. On the date of November 3, the price broke through its previous high. This is a daily chart for Berry Global Group. Since mid-October, this stock has been rising strongly, with the price always above its 5 SMA. And after the price moved sideways at the end of October, there was suddenly a heavy down move, a long red candle, which brought the price not only below its 5 SMA, but also below the SMA 10, the blue line. The volume was low, especially compared to the buying volume which the earlier rise took place. This downward movement attracted early buyers, and the last candle on the chart shows a rebound whereby the price again managed to close above the SMA 10. It is also noteworthy that the buying volume during this upward move was bigger than the selling volume during the sharp drop a day earlier. The force index 2 turned green again at the end of that day. Knowing that the top at 69.33 has some appeal, as the next price target was another element that supported a low risk entry. An entry above the last white candle with a short stop below the low of the last candle, speculating on a price recovery to at least the current top, was in this case a setup that could certainly be justified. On the date of 16 November, the price broke through its previous high. So this brings us to the end of this video. As these two examples have shown, just by combining one technical indicator with other visual elements on the chart, you can identify minor price retracement setups that allow you to enter the market with relatively little risk. Always keep in mind that technical indicators are only tools in a trading strategy, and you need to interpret them with other converging elements that further confirm your hypothesis. So if you like this video, please give it a thumbs up and subscribe if you want to. Thanks for watching. Trade safe.